So what has been happening in the US housing market this week? Well, let's check out the details right now. Hi everyone, my name is Simon Misiewicz, and in this week's episode we're going to be looking at the US housing market and the predictions for the rest of 2023. So let's get into that detail. So I pulled some information from Redfin, which you can get as well, and it looks at the sold house prices, and it's the blue line that we're looking at for 2023. The black line is 2022, 2021 is the orange, and of course 2020 for the red line. And what it's showing us is that the 2023 numbers on a seasonal month by month is higher than 2022, but it is much lower than the 2022 numbers when it peaked above the 380,000. And this is the median house price. So the median as opposed to the mean. If you need a maths lesson in median versus means, I'm sure there is a great YouTube video for that. I'm not sure I'm the best person to explain the difference between median and mean. But anyway, let's crack on with the numbers here. Now, what's interesting about this data from Redfin is the house volumes. The house volumes really is much lower than previous years, or the last 3 years, in fact. So the house volume sales are down, and that is reflective of the economic issues and interest rates, which we'll talk about a little later on. Now, what is really interesting about this whole data set is house price forecasts going forwards. Now, everyone's predicting, not everyone, but there's a significant amount of people, even on YouTube, predicting that there's a house price crash imminent in the US. But the trading economics is not showing that whatsoever. In fact, it is showing an increase from January 2023 all the way up to July 2023. Then it's going to be a kind of a cool down, and then again there's going to be a pickup apparently from January 2024. I'm not convinced that is going to be the case, but overall it's saying that there's going to be a pickup in the housing market, which it seems really strange to me, but there may be some evidence behind why they think that's the case. Let's get into that a little later. US housing mortgage rates is currently 6.62%. That's much higher. It is expected to go even higher, as the Fed have said that they will push up interest rates by 0.5%. So that will have a direct impact on mortgage rates that will also increase. This alone will put off people from selling their homes to buy another. They may be on a mortgage product that is, circa 3, 4, 5%. Why would they go for something that is circa 7%? They wouldn't. They wouldn't want to tie themselves into a 30-year mortgage at that rate. So the only people that might be looking at selling their property to buy another one is ones that are doing it in cash. But for the majority lucky for mortgages, man, this is not good reading for them at all, especially the prediction of interest rates going up by 0.5%. Another reason why interest rates is going up is because of CPI, Consumer Price Index. The US government wants the inflationary target to be 2%, and that current market, so you can see all items, is at 6.4%. That's significantly more than 2%. So what will they do? They will increase interest rates. They want interest rates to go up, and they want inflation, such as wages, to go down. And that will be caused by unemployment. They want unemployment. Not quite sure I totally understand it, but apparently it will impact on inflation. And you can see the Consumer Price Index. I'm not sure increasing interest rates is going to be significantly helping us, but I'd be really interested in your views. If the CPI is going down from the highs of 9.1 and it's 6.4 now, would that naturally progress down to circa 3-4%, which is more manageable? Or are they being so aggressive that interest rates is going to be used to bring it down to 2%? Please do share with me your views, your data sources, to enable us to be even better with this type of report next week. Unemployment rates, as you can see there, the highs of 2020 and 2021 decline. 2022 and early 2023, we're not seeing much unemployment, which the more people that are unemployed would affect people's affordability of homes and therefore going into sale. We're not seeing that at all. And in fact, I know that the government, again, is looking for unemployment to be around about 4 or 5%, which again is putting pressure on the economy, which means that the inflation will come down. Apparently, that number will help. Not quite sure. Again, I understand if that will happen or will work. But again, I'll be interested in your views on that matter. Income before taxes, income is going up along with inflation. People are asking their employers for greater wages to keep up with inflation, and that, by the looks of things, is being granted. Disposable personal income, again, is also increasing to keep in line with inflation, but some people are saying that the inflation is actually outpacing the wages and the net disposable income. Again, how are you being affected by inflation in the United States? Is it really much of a burden for you? Please do share your stories, your insights. What was really interesting about the economy is from the National Association of Realtors, and they talk about housing affordability. And what I want to share is their data, because it was showing in the gold in the middle section there that the 2021 percentage of mortgage payments against income was 17.6%. But as you can see from, as early as May 2022, it was 25%, and actually it stayed around about that same level, apart from this month, or December 2022, I should say, of 24.7%. Still incredibly high, to say that all your housing expenditure is being swallowing up your wages. But an interesting insight nevertheless. And if we look at 2020, when it was 14.7%, moving up to this 24.1% in 2022 is quite significant, to say the least. What this graph is showing is the amount of debt servicing for income. So we can see there that the debt servicing to income is increasing. So from a graphical representation, it shows you that people will be struggling to make their debt payments on their homes for the amount of money they've been paid, which is interesting because with their wages are also going up. So clearly the amount of interest that's being paid out is greater than the increases in wages. Again, are you going through this? Please do share your what's happening in your life on this channel, please. The other side to house price impact is the number of houses that are being foreclosed on. And this graph is really interesting. I mean, we're looking at 2008, 2009, when there was a massive glut of properties going through foreclosure. In 2021, 2022, we can see that there's been a movement upwards. Now, hopefully it's not too scary at this point in time, but would that increase if inflation continues to increase, interest rates also increases, and therefore putting pressure on the wallets and purses of individuals trying to make ends meet?